Scott's there already. Judd, looking for Eric in Northport. Where is he? It's not here. You're late to class. Secret Agent Charlie, good to see you. Hope everybody's doing well. Great clips. No, this is from Timonium's Finest. This is from Sam's Barbershop. Sam has not been there since he died. There's Mark. He was out. The other guy was out. So I had some guy talking about the Ravens the entire time and clearly not paying attention. So we'll grow this back out or cut it off or do what we got to do. But what we have to do today is talk about what's going on in the market, what's going on with rate cuts, why basically the market shrugged off exactly what we were hoping it would yesterday. And now we dive directly into our charts and our slides and everything else that comes with it. Huzzah! Feeling good. Well, that's the point, right? Market's continuing to move higher. Looking at the futures real quick while we get for everybody else jumping back into the room. Give everybody a couple of minutes. We had 900 people join us yesterday for the Fed meeting in our member room. We had 400 people coming in through our Market Masters room. So again, nice to see the community joining us. Nice to see more and more people taking interest in what we do. Hopefully you got a lot out of that yesterday. 2 hours of our time. You learned a lot about how Blake and Brandon and Don and I all kind of view the world similarly, but also a little bit differently. And it's nice to have Don just like in a black screen, and then all of a sudden somebody says something and he like jumps right back right through the window, like the Kool-Aid man, with a joke at your expense. But that speaks to the culture around here. It's why it's a lot of fun. Give each other a little bit of crap, but also learning about the markets and taking it seriously. And we are at 6,700 on the S&P 500 this morning. Russell hitting 2350. Strong day today for the small cap stocks on the backside of that 25 basis point cut. Again, the expectations moving forward that we're going to see more cuts into the end of the year, October and December. That's beneficial for a lot of those companies that may have floating rate structures. Obviously, cuts to this brings us into those companies like CAG. Are they finally going to get off the mat? Some of these consumer defensive or cyclical stocks that are structured and facing debt pressures at the moment. And how will they respond to this? Well, once again, we're watching names like CAG as they hover around their 8 and their 20-day EMA, looking for rebounds, looking for bounces. We're just not there yet. As always, you join us at 8:45 every day because, look, markets are up this morning. We saw a lot of movement yesterday. Somebody just mentioned volume weighted average price. I want to show you this because in this environment, look at this move that happened yesterday. We bounced all the way down, we came all the way back, and Don said, "Yeah, Garrett might have been onto something." Well, again, all I was looking at was volume weighted average price, right? 1 minute volume weighted average price. Yesterday, we sold off. The announcement came at 2 o'clock. We had a pop. We sold. We pushed outside this Bollinger Band. We bounced back up to the first standard deviation and sold off. And at 2:55, came outside our bands, came outside the fourth standard deviation line, and this call option, the 640.54, went somewhere from around $1.10 to about 3.40 very, very quickly. So this is what we're looking for. The opportunities to move outside these bands, some flat movement, some outside the second standard deviation on the Bollinger Bands, outside the third standard deviation on the volume weighted average price. And if you don't know what I'm talking about, welcome. Again, we talk about this regularly during our live sessions, during our member hours. I will cover this in the last half hour today. We have a very special event coming up today at 2 o'clock. I will take everyone into the close at 3:30, and I will review this trade explicitly because this type of environment where stocks are moving to the outside of their third standard deviation bands to the upside, and then all the way to the bottom, third standard deviation to the downside, create opportunities to take a very tight trade on whatever the in the money call down here or in the money put is up here and look for a quick reversal based on the fact that this is how markets have been up behaving heavily since 2018 when Stanley Druckenmiller pointed out that it's very hard to follow trend in an environment where stocks will move into the third or fourth deviation and reverse. It's very hard for short sellers to time this market. It's very, very hard to trust certain environments where all of a sudden markets will turn right back around and move 5, 6, 7 points in a matter of 5 to 10 minutes when clearly the news may have been bad or the trend may have been breaking down. So we'll dig deeper into that today. Once again, where we sit right now, Russell 2000 moving higher. It does seem that momentum remains very strong right now. We've seen strength in the Russell in the last 24 hours. That's one of the things we'll talk about right now as we discuss every day at 8:50. We are measuring stocks on a bell curve. We are looking at the stocks in breakout conditions versus the number of stocks in breakdown conditions. And what this gives us is a strong understanding of flows in and out of the Russell, the S&P 500, the Nasdaq, and all sectors, right? You don't need to look at money in the middle, the stocks chopping around at 1 to 2% over a period of a week. You need to look at the stocks that are up on the week, up on the month, up by large amounts, and down on the week, down on the month, down by large amounts with a similar beta structure. And it gives us a number. The number of stocks that we define in the poor man's version of breaking out are at seven. The number, or forgive me, are over seven. They're currently somewhere around 24. The number breaking down are around 17. And what we're specifically looking for at this time is more capital flowing in. We're seeing strength in a lot of small cap names that otherwise don't really deserve it, right? A company like Plug Power, right? Plug Power jumped 20%. Plug Power, this company should be unplugged. Hey, I wish I had my clapping thing, or you can do the boo this man thing. Completely unprofitable company in the electricity space. But once again, as we always state, high short float combined with high crossover, RS 810 82050 EMA. What happens? 153 to $2 in a period of 2 days. These are the things we're always looking for. On the breakout side, you have names like AMAT, Netflix, LRCX and Tesla. On the breakdown side, NVIDIA's under weakness. We're seeing BLDR under weakness. We'll talk about some of those names in about 7 minutes with the runner. But the point that I'm making is that it is still all systems go in this environment. Just two sectors are under pressure. Financials are improving, but consumer defensives are weakening because of the rotation out of the defensives and back into those bigger tech names moving forward. All right. So, y'all know what happened yesterday, and if you don't, you were living under a rock. And I will tell you that rock sounds pretty good right now, given the state of affairs. Federal Reserve lowered its interest rates by 25 basis points. Target is now 4 to 425. And what does that mean to me? Well, once again, I am paying more attention to this, which is the overnight rate, the secured overnight financing rate, currently at 4.38. It is a challenge when the Fed cuts rates and we have the SOFR, as I explained yesterday, over that, because this is collateralized financing and this is uncollateralized financing. More on that later today. The question is, will the banks, what the Fed lends to banks, will the banks pass the savings on to other banks when they are lending? And if they are not, that can signal some challenges in the regional and upper banking space. It means they're hoarding cash. We have to just pay very close attention to this because, again, we did warn about the possibility of this being a period of combination of money market structure issues, some challenges around year-end corporate taxes. The quarters are ending. We need to see that SOFR drop back under the Fed funds rate to give us confidence that there isn't something brewing under the surface. I will dig much deeper into this today. It is not a conversation when you are only on your first coffee, and it is barely a conversation you ever want to have in a bar. So we will move on. I will just simply note I'm paying very close attention to the secured overnight financing rate and how it compares to the Fed funds rate. But Right now, we are confirming an easing cycle has begun. The Fed is cautious on jobs and inflation. They reinforced their dual mandate yesterday. They're trying to signal a soft landing, but they are warning about labor market risks. This is a direct driver of yields, of the financials, of the dollars, of risk appetite. Pay very close attention to the 2-year and the 10-year Treasury spreads. Watch the XLF, the KRE, the Russell 2000 ETF, which is the IWM, the dollar index, which is the DXY, and of course, the good old TLT, which is our 20-year bullish Treasury bond ETF, which is down this morning. This is the bigger news. And this is pretty significant because, again, NVIDIA now committing to Intel. Intel shares are up now in the 30s. Now, we were selling put spreads on this. They are teaming up on AI and PC products. This is breaking the narrative of the pure competition into semis. It is providing a lifeline to Intel's turnaround story. It is reinforcing NVIDIA's dominance while broadening its supply base. And under the surface, China going after NVIDIA and NVIDIA turning right back around and saying, we're going to work in America, we're going to work with Intel. I have commonly cited the debate that we are involved in what Michael Howe has defined as a capital war. But this is proof, further proof, that the United States right now, under the Trump administration, is engaging in is what is known as the political economy. They are shifting cooperation around the globe and now focusing on how this nation manages wealth. It is a radical view because it hasn't been done in 200 years. But that said, this right here signals to me something that we have posited for a long period of time. We might not be in a physical war, but we are in a currency war, and we are most definitely in a Cold War, one that is defined by war level spending to GDP. People keep saying we are spending 6% to GDP on our deficits in a period that we're not even in wartime. We are in a wartime. It just doesn't actually involve physical war. We are fighting financial battles. We are fighting AI battles. We are fighting everything without the carnage. This is what is happening in our economy. We are drastically ramping up this battle, this Cold War, tech war, AI war, however you want to define it. And that is why this number is where it is. I've thought about this long and hard for a long time to sit around and try to justify it. And it's the only thing that I can get back to. And I'm a firm believer in Occam's razor. Whatever the most obvious reason is, usually is. And to me, the most obvious reason is we are fighting these battles on AI, electricity, chips, because that is what will drive and define the future. So, money flows into Intel and NVIDIA, and investment comes from the U.S. government, and these become the heavily defended equities with the support of the U.S. government. Finally, jobs and data before we get to the runner. Jobless claims fell to 241, down from 263, while crude oil fell. So the labor market is complicating the Fed's inflation fight. We will not get another jobs report for another month, 3 weeks. Low oil pressure energy names, but we could see an ease in the inflation expectations on the energy side. This will create some chop, obviously, in the energy sector. The big name we have to watch today is FedEx. FedEx reporting earnings, and not a lot of optimism is building around this name at all right now. We will get those earnings, I believe, after the bell. And the key thing here that we got to pay very close attention to is how soft is demand, and does this again reflect into what Blake was saying yesterday, which is the acceleration of the stagflationary environment. We will see. We will get insight today. FedEx is a major bellwether for trade and for tariffs and everything else heading into 2026. All right. Check into the room, make sure everybody is still breathing. All right. People without money can't buy anything. Well, they got credit cards. That's kind of the way that the Fed sees it, right? Well, there was something I just saw. CBOE. So hold up real quick. CBOE for, yeah, there you go. Okay, so there is no pricing in at the moment of a 50 basis cut, is what you are showing me here. We are now at 80 for December. So the market's only expecting a single cut in October. And just a reminder, let's go out to October 2027. Is that even a possibility? Oh man, this all just started, kicked in. September 2027, 2.75%. So 2 years from now, that ain't going to be a very pretty economy at that point. And keep in mind, we have some sort of COVID or '08 style crisis. You're going right back here. But we'll cross that bridge when we get there, everybody. January, full point, March. Wow. That's 5 cuts. That's 6 cuts potentially. So people are getting aggressive with the bet on Jerome Powell being out of a job. Let's get to the runner. Remax, housing stocks, Nail, all of those names in play. Taylor Morrison, talked about that. We talked about it yesterday. TMHC, right? Smaller cap, breaking above that 20 and that 50, that 8. Small cap, taking the stair steps up. Remax, same thing. Remax is at the top of the list, strong momentum, holding above that 9 day. I just like buying this stock and setting a 2% stop and holding it back here at this level and just trying to continue to ride momentum on Remax. This is a very strong chart right now. Like the fact it's just running, not just running above with its 20, it's running with its 8. That's very strong momentum, and we are not overbought just yet. Microsoft. Well, what are you going to do? Well, this is one of those names when Gianni's got to step in on this one. One of the biggest names, obviously, in market capitalization, sitting at $3.8 trillion. If you're trading with something like Microsoft, the simplest way to do it is just set a stop here, buy in the money here, and sell out of the money up toward that 520 level. And look at short duration into October. And then if it breaks back under that 20-day EMA, you are out. So whether it's the 510 to the 515 or the 510 to the 520, you set a cap, you keep a tight stop, and you look to benefit simply by trading around those very specific metrics. Option Profit Calculator will give you a full mathematical breakdown of what a spread looks like on a name like Microsoft. Very liquid stock, very liquid options chain. Currently not at 512, currently at 511. Thank you very much. Yesterday's data set. But just to give you a hypothetical on this, let's just say you go out 2 weeks, 3 weeks. Let's go out to the 10th. If you buy the 510 and you sell 520, this will be your breakdown. 515 to make 485, 95% probability, a 95% return goal, 44% return. Now, if the stock breaks back to 507, 508, you could see right here that your losses are capped. 507 is the 20-day moving average, about a 10% to 15% loss in the next 5 days. If the stock rebounds and moves higher, gets back up to 520, well, 30%, and then hopefully time just keeps on ticking into the future. You're welcome. Uh, Clean trade, strong momentum, top of the food chart, tight stop, right back at the key moving averages. Not trying to do anything fantastic. All right. AEO, Golden Cross. Yeah, this was brought up earlier. This is a This feels like a Berman's stock. Golden Cross here. Um, eh, I just don't like this company. This is a bias call on my end. You're overbought. You're overbought. I'm going to scratch this. I just am. I, I don't get excited about teenage clothing. I just don't. I'm out. Bail. Bail. Not much on the downside, shockingly. Uh, Weakness is really kind of defined by handful of names like NVIDIA, BROS, Bros, Dutch Bros. Oh, poor Dutch Bros. A little late on that one though. Missed that by a couple of days. NVIDIA, ALGN, Align Technology. You're a terrible company. Teeth. You think people are putting money into teeth right now? Mm-mm. Trimble. If Trimble breaks under 80.32, it is a short. But on our list, we have MO. I mean, look, I can't short. I am long Altria. I'm comically long Altria. I'm not going to short it. And I don't, and I'm not, and here's an important thing about it. Even though it's kind of moved into this bearish looking, move with this 8 and the 20, the broader market right now is not under momentum pressure. So I'm not willing right now to sell calls on my position simply because I don't think this stock's going to remain lower for longer. But on top of that, I don't want it to get called. Now I'm already making 6.5% on this. If I sold my calls up here at say 68 and they got taken out and I wipe out half my position, I will end up paying more in taxes than I will in what I would generate from the selling the calls. So you got to be strategic about that. Like, yeah, I guess I could get out of it, but I actually end up, no, I take my gains, but then I end up in a situation where I own all these capital gains taxes because one, I do a lot of last in, first out. I should probably change that to first in, first out for this situation. But, in this situation, looking at some of the stuff that I've owned this since 48. So I don't want to let it go. It is a difficult stock to short, and I typically would only short it in environments where we have those liquidity events. But the thing about those liquidity events is that when markets do go down, typically Nvidia as a defensive sees inflows and will not get beaten up badly. It's a great stock to buy in the event of crisis. BLDR is under pressure. I would look for a reversion on this stock actually. Builder's for first choice, big dump. What we're going to look for is insider buying on some of these names. I actually like the fact that this stock is as relatively inexpensive as it is. Let's take a look and see if there actually is a options chain on this that we can use. Because if there is a pretty liquid chain, I'd be happy to own the stock at a much lower level. It's not bad, but it's not great. It's not great. 150, 110, 110. That's a very wide spread. Um, what I would be looking for, just I would monitor these options chains. If I can sell down at the 120 level and buy at the 115, I would do that. If I can get it at 115 to 110, even better, and look for a trade. The problem is there's too wide a spreads on some of these names. So maybe it's an opportunity to look at something like the XLB, just the broader housing in, itself, the home builders, because once again, lower rates, we should start to see there's chatter right now about possible political intervention by the US government to create a national housing emergency. And if they did do a national housing emergency type of provision, man, these spreads are terrible. What can you do with housing? This is awful. We'll spend some time looking for that. If they do that, then obviously there will be a lot of optimism that they're going to cut a lot of that red tape around the country. TPH, Tri Point Homes, is also one of those names that is very cheap in the Graham and Piotrowski scores that we've talked about. Just a reminder, the F score is a 9-point score created by Joseph Piotrowski at the University of Chicago. It helps us identify a combination of value and quality. And then the Graham score is an intrinsic value. So when it comes to housing names, there's not a lot of option opportunity unless I'm going to move into like DR Horton or any of those names. Is that even right? DRI? I don't even know. Um, but I like buying these stocks right above these key moving averages. So TPH popping above that 20-day EMA, Taylor Morrison, they just become buys and holds, and you're looking for 5, 10, 15% moves to the upside before they get into overbought territory. And then you dump them back at their moving averages. All right, Yala. Don't know what you do? Yala Limited Group. Okay. How about a nice Saudi technology company that we have no clue what they do? What does that sound fun? Can I do anything with this? Or am I just buying the stock? Watch this have like the most liquid option chain in all of finance. Eh. Nope. Eh. All right. I mean, look, everything here is coming together very nicely. Buy the stock at 786, set a stop at around 750. Buy it. Look for the momentum. Look for us to start another charge higher, possibly back up to that 950 level. This is coming out of, I assume, our F and Graham score screener. Nice move here on the RSI, strength on the MFI, flip over on the MACD, positive ADX. Yep. I mean, this is the type of thing that I want to trade on. And look at that. Oppenheimer, last recommendation around it, a whopping 4.5 years ago. Way to stay on top of it, guys. Post strong revenue growth. Like this is just something to trade. And as you can see, we've had these moves above the 20. 674 took us up to 756. 760 took us to 912. My point here is here's what you're going to do in this trade. You're going to buy the stock as the 9 and the 5 and the 20 are crossing. You're going to trace the 20. And if we drop back, forgive me, under the 8, and if the 8 takes off while the 20 lags, you will use the 8 as your stop. So here is 667. Here is the exit at 731. That's a 10% move in about 7 to 8 days, only trading the underlying equity. And I will spend a great deal of time understanding that Yala does the largest social network and online gaming platform in the Middle East and the Northern Africa region, focusing on voice-centric social chat and casual gaming. That sounds like, oh, wait, they've got the Yalo Ludo, the online popular board game. This feels like Weibo, everybody. Just feels like Weibo, a momentum application name. This is right up my alley. I will throw some dollars down on this today. 750 is my stop. My target's $9. Yalla. And then LBRD. Have you ever? Liberty Broadband is back. Good grief. I was hoping this was the company that owned the Braves, and it isn't. All right. Liberty Broadband breaking back above that 20-day moving average. Not a whole lot of news around here. This thing has been downgraded constantly. But again, you have that 20-day pop. Let's take a look and see if we have anything we can do here. Otherwise, we got to go right back to the top with our key moving average names. I don't like any of these options chains. Yeah. All right. Well, not going to really do much with this, but 1 second. Let me give you a little bit of advice. Just buy in the stock. Pretty simple. All right. On Yala, your stop's 60. I'm going to drop that down to 750 with a target of 9. This is above its 20-day. Keep a tight stop. Target here is 64 to $65. LB, RDA. Huzzah. All right, cool. AMD down on the Intel news. DHI is DR Horton. Thank you. I was thinking of Tony Horton's, the donut shop. That's the problem. GSCLI. Price to book value 0.7. Completely unprofitable company. Book per share 51. Hmm. Cash per share. Uh, GCLI Liberty. Where is that? Alaska? So that's your problem. The problem is you're looking at a price to volume on a telecommunication structure company in Alaska. Um, Sometimes stocks that don't have huge market capacity and competition and have proximity to places like, say, Russia, will trade at deep discounts. There's just no real incentive for capital to flow into some of these things. In addition, you look at the energy sector, like upstream oil and gas right now. You want to know where the incentives are in the financial sector? Price to book. 24 companies in the United States, upstream oil and gas production, trading for less than their book value. What does that mean? It means that Exxon should just buy them and turn them into cash generating assets. But instead, the incentives for Exxon and Chevron are to buy back their stock and hike their dividends and use their cash flow that way. So there's no shortage of what you're talking about with GCI Liberty. There's no incentive in the financial system to go in and buy these things on the cheap and make them productive assets for larger players. These companies are going to have to sink or swim on their own. Big insider buying. Cool. I'm in on that. SEC Form 4. Come on. Oh no. Is their site down again? Well, no SEC Form 4 for you. We'll figure that out later. Glibba. Okay, we get it. It is cheap. Okay, all right. Cool it, cool it, cool it. September. Okay. I don't know because I have to actually see the SEC Form 4 document and I can't see it right now. Edgar John Malone. I will look into that. I can't find it right now, and I'm not going through Edgar. It's going to take me 20 minutes to find one single document, but I will look it up. TIGO, last thing I'm going to look at, and then Don's coming on. Milcom. Ugh. Man, you guys are really pulling these names out of nowhere. It's really exciting that everybody's realizing that there is an entire financial market outside of the United States. This is a really strong, this is a very strong momentum stock. That's all I have to say. 8.4% yield. Cheap cash flow, cheap EV to EBITDA. But again, foreign company, hugging and loving that 20-day moving average. I don't know anything about the options chain. I doubt there even really is one. This is a $8 billion company with a EV to EBITDA at 14.8. So there's a big debt structure there. But good pure momentum. And if you're going to continue to ride it, keep your stop at 47. All right. No, I'm going to keep staying. I'm going to stick with SEC Form 4 because it is reliable and we have our own tools that we've been building. So we will continue to go from there. All right, it's 9:20 every day. 9:20, everybody. I hope I confused you thoroughly enough today with my conversation about the Federal Reserve and war and everything that comes with it. But The point of today is to trade post-Fed and to prepare for tomorrow's triple witching. Very important day tomorrow with trillions of dollars sloshing around everywhere. That is why we are here to go live from 9:30 to 4 o'clock every single day here at TheoTrade. We want to thank you for your time this morning. Be sure to click the link. And remember, 2 o'clock today, big event. Click the link in the chat and we will go from there. Have a great day.